Welcome back to the Krown crypto channel, of which today is another special day as we're going to do the good old mind dump on the macro for Bitcoin here. We're only going to be talking about higher term timeframes, really focusing on the next few months to year to come. And with that in mind, I want to point you towards the prior video in this series. That would be in the long-term analysis playlist. And I forget what I titled it, probably something along the lines of definitive end of cycle prediction, whatever it is, it's right there for you. We're going to go over a brief synopsis on today's video and first go over kind of the short-term in relationship to the higher term timeframes here. This would be one of the few times where I'll actually say, hey, if you do feel compelled, it would actually be rather helpful to like this video, maybe even subscribe as well, although that's a little bit less important, but liking the video actually does quite help. And well, hopefully I can actually provide some value to you to begin with. So let's actually start off with that, and then you be the decider for yourself. Okay, so let's start it off right on over here with the weekly for Bitcoin. Obviously, a lot has happened in the last few weeks that is of great significance. We got bearish on this channel below 63,500 based off of, well, not just the shooting star dildo right here, but the continuation below that region with targets down into the mid to low $50,000 territory, of which that kind of leads us into where we're at right now. So the question is Bitcoin primed for lower? Well, we do see several points of confluence right here with major drives of multiple drives, actually, of bearish evidence on weekly RSI and also the bi-weekly as well. In fact, the bi-weekly is a little bit more diabolical here, as we do see, well, several drives coming off the highs over the past 6 months for what it's worth. Now, that is going to be combined, of course, with our momentum oscillator, the stochastic over here. On a weekly basis, we are nose diving below the critical zone, which typically, in my experience, does imply that we will see a test somewhere down around the edge of the bullish control zone at minimum, and very likely a bounce there. And then we'll come back to it after that. But that condition will be met, especially coming into this week, into this weekly closure, as long as we are closing below 65,400. Dyslexia getting me again. And we've already seen this closure for CME, essentially right around here, which is $66,000 required for that. And of course, CME, for, in case you are wondering, obviously has all of the same signals as well. A little bit more nasty right there. And typically, whenever I see this many drives of bearish divergence, even just 2 drives of bearish divergence on a higher term time frame like this, I am looking, or any time frame for that matter, I'm looking at minimum for a test down to the 21 exponential average, which on CME we have not gotten just yet. Spot price action is a little bit closer, but CME I do find the more accurate chart, especially for signals. Just in general, they have a higher hit rate from my studies. They have a decent amount of higher hit rate, especially on the higher term timeframes. We're talking like, definitely more than 5%, probably more around 10%, depending upon what sort of indicator that you're looking at. Anyways, that would imply a little bit further down before, a relief rally. But I should first talk about, what would be an invalidation of this as a bearish setup. Well, there is some hopium here, obviously. There always is. There always needs to be some sort of invalidation. Otherwise, your pants are down and big bear Jesus and big bull Jesus are standing right behind you, and they are ready and waiting with massive red and green dildos. And I'm not talking about Christmas. I'm talking about getting absolutely fucking wrecked. So what would that be in this case right here? Well, CME looks a lot worse, so we're just going to avoid that chart, only bullish things for right now. Now, what would actually be meaningful on the higher term timeframes here for Bitcoin? Again, we are only talking about higher term timeframes, but reclaiming the last daily lower high, which would be $59,000, especially on a closure, that would start to look pretty damn good for Bitcoin, of course, and that is again at about $59,000. So as long as we're living below there, any bounce and any short-term rally around that region is just another lower high, and very unimpressive. I'm not saying that Bitcoin can't do it. It's just that's what would be required in order for me to let go of this next idea that I'm going to present to you before we get into the very macro view of this. So let's go over here and let's bring up the, if you want to be bullish, turn your fucking eyes away from this chart. I'll tell you that right now. And essentially, what could this look like over the next few weeks if we do get that follow through? Well, Bitcoin is still on the macro timeframes, very much within an uptrend, no doubt about that. We have an uptrend and higher lows as long as Bitcoin is above $43,000 on a weekly closing basis. So as you can see, the green 55 exponential average right here is starting to, get around that region, which I do look for on my higher lows in a bullish trend on your higher lows. And that, looks fine right there, right? But that does imply that if we do see another leg down, especially below the 21 on a closing basis, that's going to be the next relevant target, and that's also confluent with the 0.618 Fibonacci retracement, kind of between there and the 0.5, a good area to be looking for on a higher low on a long-term trend. The problem is we're dealing with big numbers here, so that could imply another it's, well, $8,000 to $10,000 move to the downside. Who knows where stray wick comes? And of course, we do have the world situation going on right now where, the coronavirus is once again rearing its, or I said the C word. Oh shit, we're fucked now. But the old flu dump, or the old flu is rearing its ugly head once again. So, could we see something like this? I do think it's very, very possible. This would still be long-term bullish, and this would just be one massive reaccumulation formation with higher lows, implying that buyers are getting more aggressive. And on a break of our top side resistance right here at about 65,500, that would imply, a measured move and implied target all the way up to 92,000 bucks. I'm sure that also is going to be confluent with one of our major fibs coming off of the grand scale right here, which perhaps I could actually put this on my right template. There we go. Beautiful. And what do you know? That's right around the 1.618 Fibonacci extension. Now I took a little bit more of a, let's actually do it on the wick basis. And what do you know? There's your wicks, and there it is, right around 93,000 bucks. That is pointed up right around 92,000 bucks. Close enough is close enough in this case. Okay, great. So that's kind of what I'm looking at right there. There, of course, would bounces along the way. In fact, at the yellow 21 exponential average right there, that would be the good hopium for right now, actually, which I'll just briefly show you, and then we'll get into the very fun long-term stuff. So I'm going to take off this, take off that. There you go. Let's take everything else off and get naked on these charts. And what do we see? Well, just one of those weird things that seems to work out on Bitcoin and kind of applies for general markets, although typically on a monthly, the longer and longer that the asset has a history. And anytime that Bitcoin is above the yellow 21 and it has a positive slope, so two major factors right there, it's essentially in a long-term macro uptrend, and vice versa for the other side. You see this going all the way back to 2010, the genesis, all the way throughout this first rally, then this major one right here, then this major one right here, and more recently right here and right here actually. And what do you know? Bitcoin, coming back down to that region should theoretically be a major bottoming area if we are in like an actual trending move right here, which yes, Bitcoin isn't an uptrend, but I look at this as likely one major consolidation. One of the keys for this, or one of the keys why I believe that, is because if we look at the volume here, that is a consolidation volume. If we look at volatility is trending down right here after hitting major extremes earlier this year. So it's more likely, as we do see this contraction phase go onwards and forwards, that this is still consolidating over a long period of time. Anyways, so I'll take that off now that I've hazed you with all of that. And let's talk about some more fun stuff long term. And again, remember that there is invalidations for this. Definitely can happen. I think it's a little bit less likely, but who knows? Maybe they just announce that the money printers are going to be going extra overdrive towards this new potential situation with this global issue that we're all dealing with, I guess. Possible, right? Anyway, started off right over here. So this is where I'm going to quickly recap what we did in last week's video. So if you want the more in-depth analysis of that, definitely just go back there, and it will be a little bit more slower paced with nuances. But what we'll basically go through right here is this. So I'm going to put on my drawing tools. I've denoted all of the major macro cycle lows and highs with these vertical lines right here. And the reason why I'm marking them off, and it's on a weekly closing basis, by the way, and the reason why I am marking them off is because we're going to do a statistical analysis between cycle lows to cycle highs. There's a specific reason why I'm doing that. I got a few questions about this last time. Why don't you do it from high to high? It's very actually simple because cycles begin with a low and end with a high. Cycles do not begin with a high and end with a high, obviously. But perhaps other people would disagree. Regardless of that, again, it's a fucking cycle, low to high, or high to low, whichever way that you want to go. Anyways, what we'll also be doing is, or what I also want to point out about this chart right here, this is a Bitcoin log curve zone chart. So all of our macro cycle highs have come within a test into this deep red zone right here. All of our macro cycle lows have come in with a test to the bottom of the green zone right here. And our mid-cycle consolidations have all come within this yellow zone right here. By the way, the bottom side of that yellow zone is right around that $48,000 region, which if we go back right around here, that would be about where the green 55 exponential average is going to be in the next few weeks here. And also, if you do recall, right around the 618 Fibonacci retracement. Just, it is a golden pocket after all. Anyways, okay, let's get off that. Sorry, couldn't help myself, but let's go back on over here. Okay, so now that we explained that, what I'm going to do is I'm going to throw these babies back on, and we're going to go through and we are going to measure, as you can see right here, the time that it takes in days from the low to the high of that cycle, and then the percentage gained on that cycle. So this first one, 322 days, 37,750%. Not bad. Okay, interesting. Well, let's move on to the next one, starting right on over here on this major low and ending on this major high. Again, green zone to red zone. That's how we do it. That's how we're defining it, so that we can standardize these things over time. And this one took 742 days from bottom to top, 46,000% on a weekly closing basis. So technically a little bit more than the one prior, although we do kind of expect that to diminish over time, but that is actually not what the data shows, which is interesting. This one is 2.3 times longer than the previous cycle, or if you wanted in a percentage measure, it's 130% longer. Okay, so the cycles are getting longer, and they're getting longer at, well, a pretty wide margin right there. So let's look at the next one, starting right on over here in 2015, January, ending in December 2017. And that one was 1,064 days long at 9,000% gain from bottom to high. This one was about 1.43x longer than the second cycle, or about 43% longer. So now we see that these cycles are obviously getting longer, but the rate at which they're getting longer is diminishing over time. And now we have a humongous drop off in the gains from bottom to high of that particular cycle. Again, green zone to red zone. So now let's move on to our current one over here. Understanding that we have not gotten a test into the red zone. Obviously we did in the green zone. That's your lows right there. I'm kind of already giving away my hand with this right here, but whatever. Again, this is a bit of a synopsis. So, so far this cycle, and I'm gonna have to add 7 days to this. Hey, stop that. So this cycle has been 10,000, or not 10,000, but 1,087 days long. And from bottom to high so far, we've seen about 1,900% gains. And if we're running off a relationship between the first, second, and third cycle, we can see that, you know, from first cycle to second cycle is about 130% longer. From second cycle to third cycle, it was about 43% longer. So, you know, it's reducing at a rather rapid rate. I'm just going to spitball some numbers right here. Again, I want you to know where I'm making assumptions, and this would be one of them. I'm going to assume that this one's going to be at least 20% longer than the previous third cycle. And I also did something that I think is less likely. But I basically also wanted to put in a potential date for what if it's about the same rate of change that we saw on the third cycle at about 40%. So then what I did is I plotted these times out right here. So 20% longer than the previous cycle of 1,064 days would be about 200 days, so a little bit more than half a year. And that puts us at basically June 2022. Okay, interesting. And I think that one's a little more reasonable, to be fair. If we go with the more long form one, again, understand where this is coming from. I think that's a lot less likely, but possible, of course. Based off statistics here, 40% longer, so very, very similar to the last cycle's gains. That would put us in about basically September, October, so Q4, start of Q4 of 2022, somewhere right around here. What I've also done is I've taken this red brush right here, and I've essentially, what have I essentially done? Well, I've essentially drawn a regression, or drawn an extension of where I would assume the top end of the log curve zones will be around that time. So if we are looking for highs around these regions, we could theoretically say perhaps it's right around, in this case, about 175,000 for the early June date, and potentially as much as 213, 214,000 by start of Q4 2022. Anyways, now, can we find any more points of confluence with this? Well, actually, yes, we can, in fact, and it's rather simple. So what I'm going to do now is I'm going to take all of these away because they're going to get a little bit lost in the in everything. I'm going to take also these guys away too for right now. And what I want to see is I want to draw some fib extensions. What I'm going to do is I'm going to draw some fib extensions. We'll actually keep these ones on. Oops, not those ones. This one. Yeah, there we go. We're going to draw some fib extensions from all of the macro bases and just see if there's anything, of particular interest, of which we'll start with the first one. Wait, not that one, not that first one, this first one. There we go. So here's your macro base right here. You do see a bit of a mid-cycle consolidation around the one spot two. In fact, actually, sorry, that's a little bit off. I thought that I updated it, but there we go. We see a mid-cycle consolidation right here. finding your lows at the 1 spot 272 and 1 spot 414 is the highs right there. And then where do we find the spike high over here? Around the 2 spot 618. Yes, it does spike a little bit higher, but that was your your first cycle, so you do kind of expect it to be the most ridiculous. And let's move on to the next one right on over here. Same thing, right? Same macro base. Where does Bitcoin base off in the mid-cycle yellow zone? Right here at the 1 spot 272, and then off to the races yet again. And this one finding its highs between the 2 spot 272 and the 2 spot 414 in that red zone beautifully. Okay, let's move on to the next one right here. Macro base, boom. Where's our mid-cycle consolidation? Right there at the 1 spot 272. Absolutely fucking love it. And where's our spike highs into the red zone between the 2 spot 414 and the 2 spot 618 right there. Lovely. Okay, and then our most current one right here, which as you can see, we have yet another macro base right here. Where have we based off in the mid-cycle consolidation? What do you fucking know? Right around the 1 spot 272. So this has been very consistent amongst all major cycles. This would imply Bitcoin very likely does not close any weeklies below about that $30,000 level. Or if it were to do that, we have something significantly new going on, and it's probably not going to be great for the boo laws. If you're a bearer, well, you're probably quite happy. You'd be quite happy to see something like that, but I think it's very unlikely, statistically speaking. We have never seen that before, ever. Doesn't mean that it can't happen, but until that doesn't happen, this time is unlikely to be different. And now let's just see with that, with this regression right here, would that make sense? Well, if we actually do go into this region, you will see that the presumed high would be somewhere between the 2 spot 272 and the 2 spot 414, where the last two cycles have actually found their highs, again, in the red zone. The first one, I would argue that you actually did see it there. It's just that was on a closing basis. So, fair enough. It's kind of difficult to hit that first one and trust it, but should obviously be honest with, slight differences there. I think they're very minute and not relevant, but, some other people might disagree. Again, I want to just, present the data as it is and not like give you my stupid opinion about it. Anyways, okay, so we got through all of that. All right, great. So let's move into the next fun stuff over here. I want to, okay, where's my stupid fractal? Is it right here? I think it might be right here. Yeah, it is right here. Okay, so what I've also done is I've marked off on this chart all of the vertical lines represent the halving dates for Bitcoin. And let me just take these away for right now. Boom, boom, boom. So these are all the halving dates for Bitcoin. This is, again, Bitcoin on Bitstamp. So we don't actually have all of the data here, but you don't need it because that's not what we're focusing on right now. And I've essentially done the same thing as before. And I want to, or sorry, I haven't done the same thing as before, but what I want to show you is that after the halving, you get your first major splurt up, consolidation within the yellow zone. Okay, great. And then, next splurt up, of which a break above your last prior major high on a weekly closing basis right here towards the next major high was about 430%. Interesting. Okay, let's move on to this next one over here. You get your mid-cycle consolidation right here, and then you break your highs, and how big is that next move? About 350%. Okay, comparable, a little bit less. Well, as you can see right here, we're once again consolidating for a very long time within the yellow zone. That is fine, but I want to also see if there's any confluences with our fib retracements right here. Again, we kind of already know this because we went over it in the prior video, but I just want to mark off right here where the 1 spot 272 and the 1 spot 618 are, getting the mid-cycle consolidation within the yellow zone based off of the macro consolidation beforehand. Okay, so we get the same one right there. There's your highs, blah, 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 blah. You already know this. Same thing over here, right? Mid-cycle consolidation is right here at the 1 spot 272 low. It breaks above the 1 spot 618 high, and then off to the races. And actually, I think I did the measurement on this one wrong, so apologies on that. But yeah, it's more like 400%. So both of them are about 400%. This one a little bit more. Well, actually, pretty much 400%. In fact, sorry. So it is 400%. Okay, interesting. And let's see this next one over here. Oh, what do you fucking know? Bitcoin caught between the 1 spot 272 and the 1 spot 618 in the yellow zone. What happens if and when Bitcoin does break above the 1 spot 618? I didn't do this perfect right here. Obviously, you can see that we kind of already did if I do it exactly like this, but I'm sure that if I did it like exact, probably just a little bit higher. Anyways, let's just add 400% onto current price action, or sorry, let's actually get it properly. And where does 400% put us? Well, 300% puts us at 250. Sorry, I'm still not doing this right. Apologies. All right, Jesus Christ. This is getting mounting. Okay, let's do it right there. All right, and let's see. Okay, so 300% puts us at about that $215,000 number, which did pop up earlier. If we were to go for 400%, where that essentially bring us up to? Well, 400% puts us at actually a little bit above the 2.414. So could we see like a spike up towards that region, which would be about 275,000 bucks, and then close at about 213 or 214,000? Possible, yes. I mean, that would just be imagine that in one fucking week going from $275,000 down to 214 or 215,000. Like these moves are already so filthy already. Like fuck me, man. If you're trading this shit, which I am, and I'm assuming that probably most people here are, if these sorts of things start to come to fruition, I mean, that's like, oh God. All right, cool. So we've gotten through all of that. All right, so let's move on to the next one. Let me see. Okay, we got this one over here. I want to, oh, I forgot this about the hopium. Okay, so there is one more major hopium for Bitcoin. I'm so sorry. Okay, I do need to kind of jump around here, but there's one last major hopium for Bitcoin here. And I want to give a shout out to Mr. Hofdaddy in the Discord for calling this one out. I did not catch this one myself, although it is rather interesting. So here is the pi cycle top indicator, which is accurately called pretty much all the tops in Bitcoin's history since it started getting going over here. And or let's actually put on this chart right here. Yeah, there we go. Okay, beautiful. And you'll notice that there is a couple of interesting things about our current setup. So, or sorry, you'll probably notice that there's a few interesting things about this long term. So what are they? We're going to focus right now on the orange moving average on this one, of which Bitcoin's currently at right now. Now, if you just look at this one, similar to the yellow 21 exponential average on the weekly that we looked at earlier, Bitcoin does seem to kind of like that as a bull market support, if you will, especially back on over here in 2015 to 2018. You do see that there are a few closures below it, a few wicks below it, but no sustained closures below it. More importantly, obviously it's not going to be perfect, nothing is, but is pretty damn good over here too, right? I mean, you can kind of see yourself. It's not super obvious, but I think it's just good enough. Anyways, Bitcoin is pretty much on it right now. So if you are bullish, well, it's actually a little bit lower than where we're still at. Yeah, it's actually still around, 52,500. So I still think Bitcoin has at least like one more move to the downside, 51 to 52,000 bucks. And if you are super bullish, then probably somewhere right around there. If not, then, we probably do something similar to this over here, to be fair. Anyways, you can see that we did get a top call right in over here at our current all-time, or not our all-time high, but the prior all-time high in May and April. And that did accurately call a phenomenal move to the downside, similar to what you had on over here. Almost to the T as well, as you do see this move to the downside was about a 51.5% move to the downside on a closing basis. If we do the same thing over here, then, well, you can probably guess what it's going to be, about 50% as well, 48.73%. So very comparable right there. And you'll also notice that coming out of that, like we did get the top call right there, but after that, you actually got another long signal right here. Now the long signals are typically not great, actually. In fact, if you backtest them, they're pretty fucking terrible. But my point is that you're getting kind of a similar setup where the longer that Bitcoin stays above, well, the longer that Bitcoin stays just above this region right here, they actually will naturally cross again. It's going to take a long time. So kind of playing into that theory that, we're more and more mature within this cycle, but it probably does go on longer than what I think a lot of people are expecting. To actually directly address the clickbait title of this video, if we were to look at the projection of when this could end, which could be at earliest June or at latest beginning of Q4 2022, that'd be between about 85 to about 73 or 74% of the way there, assuming that the cycle, well, not assuming, we already know that the cycle lows are 3,000 or so way back on over here in December 2018. Anyways, going back on over here, just wanted to call this out. That's the other sort of hopium, I suppose, for the more short term. I don't think it'd be a death sentence to actually go below it, to be honest with you. I just wouldn't want to see it like stay for too long below it, to be fair. All right, I have a couple other pieces of hopium over here that I do think deserve a little bit of love as well. One of them has to do with Ethereum Bitcoin. I've been putting charts out on this on Elio Trades channel and also on Twitter as well. By the way, if you're here from Elio Trades channel, first off, thank you for making it this far into this video. And second off, I also want to welcome you, of course. We do things a little bit differently on this channel. Not to say that I don't love Elliot. He's a great friend, absolutely great guy. But we do things a little bit different on this channel, I guess. Anyways, yeah, I have nothing but love for Elliot, by the way. Nothing but love. Okay, cool. So what are we looking at right here on Ethereum Bitcoin pairing? We are looking at a macro setup. And why does this matter first and foremost? Well, this macro setup is obviously primed towards a bullish resolution. We have a slew of higher lows right here, obviously. This one, this is a weekly, by the way, as well. And we got the same highs right here. So this is an ascending triangle, a bullish reaccumulation formation. And it's also coming at the precipice of a macro region right here from your June 2018 breakdown. So this is, you know, assuming that we do break the top side of it, which is obviously not happened just yet. So validation of this moving to the upside would be above about 7.8 million Satoshis on a weekly closure. You know, we would have not just technical target all the way up to about 9.2 million Satoshis, but very likely going to work its way much higher than that because these Fib extensions here coming in from the macro base are, I mean, I don't really see any particular areas that I'm looking for like macro tops until we get way up here. How long does that take to play out? Months. Probably months upon validation, but it is within the cards. Now, why is this relevant to begin with? Well, and I'm going to put out a video on this one on Elliot's channel very, very soon, maybe even today or tomorrow. I'm not necessarily sure just yet. It's up to him, obviously. But basically, all of the macro directions in the Ethereum Bitcoin chart have actually correlated incredibly well with Bitcoin and by extension, the greater crypto markets as well. So let me just mark a few areas off here, or actually maybe we go over here. I think I was working off of this chart, perhaps. Let me just see. Yeah, here we go. Okay, beautiful. Oh, and there you go. By the way, this is like, it's not going to happen probably exactly like that. But just to point out a few other things, you know, we see extremely low volatility on a weekly. Last few times that we saw this with being resolved to the upside, we're back on over here for this move, you know, 200%, not bad. This one over here, you know, another 130%, whatever the fuck. It's like another 130%, what the fuck? Of course, volatility is direction neutral. So if Ethereum Bitcoin does break its higher low structure below about 6.5 million Satoshis, hey, this is no longer valid. It's invalidated and probably going to play out some pretty nasty pullbacks, you might call them, maybe a crash even, but hidden bullish evidence over here. Weekly jewels also still remain with its upside posturing. We're about to go back into the bullish control zone. You know, I'm more or less biased towards an upside resolution. It's more statistically likely in a format like this. Anyways, I'm getting way off besides the point. Okay, so all of these vertical lines correlate to macro directions in Ethereum Bitcoin, macro direction shifts in Ethereum Bitcoin, that is. And as we'll go over in Bitcoin, let me just get rid of this, and this. As we'll go over in Bitcoin in a second, and do I have like a million more? I do have a million more. Apologies on that. Annoying, but there we go. Okay, great. And as you'll see, as we go over in Bitcoin in a second here, all of these actually nail the macro breakouts and breakdowns and highs and lows perfectly, actually, or just about as perfect as you can on a weekly. So let's just go to this first one over here. You can see that I've marked off of this as a macro bottoming area for Ethereum Bitcoin. That was November 2015. Okay, what was Bitcoin doing during that time? Well, let's go see. Or maybe we put this on. Okay, when was that again? November 2015. Yeah, okay, great. 2015 November was where? Oh, you probably already know. You just have to look at the chart and you will know exactly where it is. It's right here. So Bitcoin at that time was just breaking above its accumulation range, right here, basically. So this was your accumulation range after the 2013-2014 highs, and then boom, reversal upwards and onwards for the next, you know, few years basically. And what did Ethereum Bitcoin do? Well, Ethereum Bitcoin was essentially straight up as well towards, well, February 2018, where we actually got a weekly reversal. Yes, there was a major high put in right here and a major low put in right here. That actually did correlate to a nice consolidation on Bitcoin throughout that time, as it was still below its prior highs right here. In this region right here. So when this one put in another major low right here, and what was this, February 2017, that's when Bitcoin like really just, you know, that's when Bitcoin literally took out its prior highs, right? So that'd be right about here, literally February to the fucking dot. Beautiful. Yeah, I did not pre-plan this, but you know, there you go. There's another macro breakout, right? And the first one was right here on this area. Or sorry, it was right here. Yeah, right there. Beautiful. So those match up really, 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 really well. Then obviously, you know, full market send as things just go to the moon and beyond. And where does Ethereum actually put in its weekly reversal? It's not right here. I mean, this is just, you know, a down move, puts in a low right here, which is a lower low, which I should actually probably put on right now. Let's see. Yeah, there's your lower low. And there is, there's your prior low. There's your lower low. There's your high, and then we get our first, and then we get our second lower high, or sorry, our first lower high right here. So that's your confirmed reversal. When was that? February 2018. Well, when did Bitcoin essentially really initiate major downside? Right around here in February, in late January, early February 2018. Not perfect on that one, but you know, a week or two off. Like again, pretty damn good. Okay, so then we downtrend, and where are the lows put in? Of course, January 2020 on Ethereum Bitcoin. So this, again, correlates to the macro direction and the macro consolidation. So it is actually downtrending throughout this whole corrective phase on the macro for Bitcoin between beginning of 2018 and resolved over here in 2020, actually. Again, you know, where does it put in the lows? And its first higher low, its first fucking higher low was right here, January 2020. Well, you already know where January 2020 is, right? January 2020 was right around here, or sorry, it's actually not going to be exactly there. No, our first higher low is going to be like March. Yeah. Oh my God. And I already know where this one's going. Holy shit. That is fucking insane. That is fucking insane. Now the actual low was put in obviously over here, but we're focusing on this one right here. And March 2020, you already know where I'm going with on this one. That was right here. So the major low is put in right there. It's just fucking mind blown. Or it's not mind blown. I mean, you should probably already know this by now. Then where do we get our confirmed reversal? So higher highs and higher lows about right here. And of course, you know, we already know what Bitcoin does after that. That was in August, I think, that we just looked at. Yeah, in August, it really confirmed like an actual uptrend. Yeah, there's your higher high right there. Beautiful. And August was right here. Yeah, on this high. Sorry, I'm convoluted here. I did not prepare this particular chart for this analysis, but that was right there. And then obviously we've been going up and over ever since. Now, what's interesting about our current area right here is that Ethereum Bitcoin has essentially been consolidating in a bullish format. Again, it's not guaranteed to break out to the upside. It's just more likely here. And we still are waiting validation of this, but Ethereum Bitcoin has been consolidating for the last, basically since May. Well, what has Bitcoin been doing if you're looking at this on the macro scale? It's been consolidating since fucking May. I mean, we haven't really done all that much. I mean, respectively seen if you're looking at the higher term timeframes, obviously. So volume is trending down. Volatility, as we already looked at, is contracting. And I do think that, you know, if Ethereum Bitcoin does break out to the top side of this, well, that would be continuation. And if we're going to get continuation, probably the full market cycle continues as well. And we have yet another confluent variable. Confluent factor that suggests that Bitcoin does continue the cycle from here and has not put in the highs just yet. Okay, so we've gotten through all of that. There's one other thing that I missed with, fuck it. Oh, God damn it, man. Sorry about that. I do apologize. I shouldn't be using such foul language right now in this very serious analysis, but I did miss a couple things on the more bearish side here as well, you know, for the short term, again, with all things considered, for like the very macro. But, you know, again, we spoke about the bottom side of the yellow zone right here on the on the Bitcoin log curve zones. The other thing that I missed was basically, you know, Bitcoin has a history playing out these, 30% or so downside moves to the yellow 20-month exponential average on its higher lows or just on its corrections throughout its market cycles. So, you know, obviously we saw this over here. I'll just measure out a few and then I'll tell you where I'm going with this. But this one over here, about 30%. This one over here from high to low, about 35%, right? This one over here, about 33, 34%. This one over here, you know, about 32%. You get where I'm going with this. We don't need to do the whole goddamn thing. And I'm not using the Lord's name in vain. I'm just using a poor way, a very lazy way of expressing myself. I mean, absolutely no offense by it, because I know that that comment's coming, but it's all good, man. It's all good. I got respect for God, whichever God that you believe in, of which we can go over here and look at Bitcoin. So again, you know, we do see that Bitcoin likes those 30 or so percent retracements, you know, between about 25 to 35 on average. And if we were to just play out, you know, a 30% retracement from our current high, where would that put Bitcoin? 47,000 bucks. Interesting. Or that's 32. So anywhere around there is fine. You know, if it's 25%, have we already seen it? We're kind of at that right now, around the 21. You know, maybe a little bit lower. Yes, I guess that's still more on the hopium side for myself. And please, 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 please do understand where the invalidation is. I'm not presenting this as fact. I'm presenting this as, as essentially a setup. But I think that's going to do it for what we're talking about right here. Keep in mind, CME closed the week 54,430. You know, Bitcoin, or it has about a $200, $300 premium over spot price action. So we probably hang somewhere right around here until CME opens a little bit later today. Anyways, I have just spoken off your head for 34 minutes. I apologize for that. I'm curious to see how many people even made it this far, but either which way, I'm doing this shit regardless of whether people are listening or not. So I hope that this was in some way helpful, and we'll do another update on this at the end of the next week. We'll probably add a few more things as they do come in. Fuck, I forgot one last thing too. Oh man, I'm done goofing all over the place. Okay, sorry about this. All right, so there's one last thing I wanted to do. So on the weekly RSI, we have actually never seen, well, we've never seen it because we have never been there. Yes, there we go. We have never seen a Bitcoin macro high that didn't at least get to the 90 read right here on the cycle, around the cycle high. Now, of course, it has gotten as high as 99. I don't think that's very relevant because that's literally like you almost never see that on a weekly. It's very, very rare. But let's just kind of draw a regression through the other highs and let's just say like 95.25. And we can actually backwards engineer what price action would need to be in order to cause RSI reads of this. Now, this will change over time, obviously. So, you know, we'd have to update this with each and every passing week. It's not going to be fully accurate, but it can give us an idea. And what I'm going to do right now is go into Caretaker's RSI and I'm going to put the critical bull level at 90. So this is going to spit out the price that would be needed in order to cause a 90 read. And guess where it is? It's right here, 198,852.15 Again, that will change over time, but it's very much in line with potential projections here that we went over earlier. And if we were to just do some for shits and giggles, I don't think that this is very likely, but let's just say that we went all the way up to 95, which is quite unlikely, but I guess it can happen. And what would that spit out? That would spit out 384,558.88. Look, I'm not saying that's going to happen. Probably makes at least a lower high than this one right here, because then you're going to get like some major divergences on your higher term timeframes, to be fair. So probably somewhere around 90 if I had to guess. All right, cool. I think I got everything out right there. So I feel good about that. I'm going to wrap this one up. Take care, and I'll see you in the next one.